Okay, let's unpack this. The internet, it just moves incredibly fast, doesn't it? Ideas can spread like wildfire. Communities just seem to spring up overnight, sometimes from just, a single post.
Yeah.
A tweet maybe that just catches on.
Absolutely. You see something go from zero to trending seemingly in minutes.
It's amazing the speed that social traction builds online.
Yeah.
Especially, platforms like X.
And that energy, it almost instantly becomes a kind of shared agreement, a consensus happening right there in public.
Exactly. So here's the question. What if that social traction, that community buzz around an idea, tweeted out? What if it could instantly become something tangible?
Something more than just likes and retweets.
Yeah, like a digital asset, a crypto token, launched right there, based on that initial social spark.
It really pushes on this idea of what constitutes value online. Can social interest itself be the raw material for finance?
Well, according to the source material we're looking at today, this investor guide on a platform called Believe.app, they seem to think the answer is yes. Believe.app is setting itself up as this social token launchpad. It's built on Solana, and its whole purpose is doing exactly that.
Letting anyone create a crypto token from a tweet on X.
And crucially, without needing to write a single line of code.
Yeah, they're really aiming for that low-friction bridge, connecting social buzz directly to blockchain automation, lowering the barrier significantly.
Okay, so our mission for this deep dive is clear. We need to get into this source material on Believe.app, really understand it.
Figure out what it actually is.
How does it work? The nuts and bolts, but also the user side. What are the big opportunities highlighted in this guide?
And just as importantly, what are the risks? Because they seem pretty significant too, based on this material.
Exactly. We're digging into this source to pull out the key takeaways, help you get up to speed fast on what looks like a fascinating, if maybe risky, new frontier.
Where social meets crypto markets.
All right, let's start with the core idea driving Believe.app, according to this source. They call it democratizing token creation.
Making it open to basically anyone with an X account.
It's about taking that online chatter, that visible engagement, and directly linking it to making a blockchain asset. The guide also mentions a bit of history. They rebranded.
Yeah, they were called Clout, apparently, until early 2025. That rebrand is noted.
Okay.
And the main concept they're pushing is this thing they call tokenized social consensus. It's an emerging idea.
Tokenized social consensus.
Yeah, the platform is based on the idea that community interest, the likes, the retweets you see, that can be the main signal, the trigger, essentially, for automatically creating a token.
So the system just reacts to that social proof.
Automatically, yes. Responding to demonstrated interest.
Okay, this is where I really want to understand the mechanics. How does it actually go step by step from just a tweet to a token you can trade?
So it starts simple. A user tweets what the guide calls an idea post. Could be anything like launching LaunchCoin for digital artists.
Right, you just tweet your idea for a community, a project, whatever.
Yeah.
Then what? How do you tell Believe.app to make it happen?
The user replies to their own tweet. And in that reply, they tag a specific bot at LaunchCoin and state the ticker they want, like ArtCoin.
Ah, okay. So tagging the bot is the command, but it's not instant, right?
Yeah.
The source mentioned a filter.
Exactly, yeah. This is key. There's a community engagement threshold. That original tweet has to hit a certain number of likes or retweets.
A minimum level of interest.
Right. The guide says this is crucial for filtering. Only ideas with some actual traction get turned into tokens. Stops it from being complete noise, theoretically.
That makes sense. Proof of interest required.
Yeah.
So if you hit that threshold.
Then Believe.app's system kicks in. It automatically deploys a new token on Solana, an SPL token that's the standard there, like ERC20 on Ethereum.
Okay.
And here's a really interesting part. Metadata from the original tweet gets recorded on-chain.
Metadata, like
Who the author was, the actual text of the tweet, the exact time it was posted, it permanently links the token back to that specific social moment.
wow. Okay, so the token has kind of digital birth certificate tied to the tweet. That's neat. And then trading starts immediately. Liquidity is provided.
That's what the source says. The platform provides initial liquidity and sets up a trading page right away. People can start trading.
And it also creates a space for the community.
Yeah, within the Believe app itself, each new token gets its own little hub, a chat, or a forum, so the people who engaged initially have a place to gather.
Token, trading, and community space,
Yeah.
all automated from a tweet. The source also mentions some tech stuff, bonding curves.
AMM.
Yes, it touches on that. It uses a dynamic bonding curve. Think of it like a formula that sets the price based on supply. More buys, price goes up along the curve. More sells, it goes down.
Okay.
Believe.app's curve aims for roughly a $1 million initial market cap for new tokens. And it uses automated market making, AMM, with Solana protocols.
So users trade against a pool of assets, not directly peer-to-peer, right? Providing constant liquidity. They also mention anti-bot measures. Part of that is a temporary but very high transaction tax when a token first launches.
Ah, yes, the transaction taxes. The source really emphasizes this as their core revenue model. How do those fees break down?
Okay, so every trade made through their interface has this built-in tax, and it gets split three ways. First, 1.0% of the trade value goes to the original token creator.
Right, the person whose tweet started it all gets an ongoing cut. That's a strong incentive.
Definitely. Then a smaller slice, 0.1%, goes to the early supporters.
The people who liked or retweeted the original idea.
Seems so, yes. Rewarding that very first wave of engagement, a nice touch.
Clever. And the rest.
The remaining 0.9% goes into the platform treasury. That's Believe.app's revenue. It's collected either in their own token, LaunchCoin, or in the token being traded.
Creator, early birds, platform. Makes sense. But the source flags something really important about that tax rate, especially right at the beginning.
Yes, this is absolutely critical to understand from the source material. The initial tax on trades for brand new tokens can be, well, extremely high. The guide says up to 30%.
30%? Wow.
Yeah. It explains that this rate gradually decreases over time as the token gets older and liquidity builds up, eventually settling around 2%. But that initial hit is huge.
Why so high initially?
They frame it as part of their anti-bot strategy and risk management, trying to deter rapid flipping or manipulation right after launch.
I guess a 30% tax would certainly discourage quick flips.
Yeah.
That's massive friction. It completely changes the game compared to normal crypto trading fees.
It definitely forces a different mindset if you're trading these tokens right out of the gate. You're paying a serious premium to be involved that early.
Okay, let's switch focus to the platform's own token mentioned in this source, LaunchCoin, LaunchCoin coin. What does it do in this system?
LaunchCoin is presented as the main utility token. It's used for things like triggering the smart contracts for new tokens. It's part of how the platform captures revenue. It's used in providing liquidity.
And maybe governance later on.
Yeah, the source says potential future governance, but notes it's to be determined. So, not yet.
Got it. And what are the basic facts about LaunchCoin itself from the guide? Supply, market cap.
It's a Solana SPL token, fixed supply, 1 billion. That's one with 9 zeros. And importantly, the source states 100% of that supply is already circulating.
Okay, 100% circulating. So no future inflation from the team minting more. That's usually seen as positive.
Right. No dilution risk from minting. As of mid-2025, when the guide was apparently written, market cap was around $200 to $250 million, about 25,000 holders.
25,000 holders. Give some idea of distribution. But didn't the source also raise a red flag about who holds it?
Yes, it explicitly flags that the top 100 holders control roughly 52% of all LaunchCoin.
Wow, over half the supply in just 100 wallets. That's concentrated.
Highly concentrated. It means big moves by those top holders could seriously swing the price of LaunchCoin. That's a definite risk factor.
Yeah, absolutely. So concentration risk noted. And its utility is mainly revenue sharing potential via staking someday, liquidity, and maybe governance.
That's the summary, yes.
Moving on, the source seems to really highlight the platform's focus on user experience, making it easy for non-crypto people. How so?
They talk about features like one-click creation, basically, just that tweet and tag process.
Yeah.
There's a built-in wallet right in the app, so you don't need separate software like Phantom.
Okay, that removes a hurdle.
Yeah. Plus, a discovery feed for finding new tokens, trading directly within the app, and those integrated forums for each token community.
It sounds like they're trying to hide a lot of the usual crypto complexity.
That seems to be the core play for adoption. Make it feel more like a social app than a DeFi protocol. The guide mentions it was on the iOS App Store with a 4.1 rating.
And the idea is this ease of use could bring in a much wider audience.
Exactly. Potentially leading to more activity, more trading volume, which could, in theory, benefit LaunchCoin.
Makes sense. User-friendliness is key for mainstream adoption. What about the team behind Believe.app and security? Anything in the source?
The team lead mention is Ben Pasternak, noted as a co-founder of Alliance DAO, which is a pretty well-known Web3 accelerator.
Okay, that lends some credibility.
The company is B24, Inc., seems focused on consumer Web3 stuff. Security-wise, it's built on Solana smart contracts.
But The source had a major caveat about audits, didn't it?
Yes, this is really important. The guide explicitly states that as of mid-2025, there were no public audit reports available for their core smart contracts.
No public audits. That's a big red flag for anyone putting funds in.
Definitely a point of caution. They also mentioned pausing the auto launch feature temporarily in Q2 2025 because of spam and risk issues. It came back with safeguards, but still.
Right. What about transparency, though? How open is the system?
Well, the source does highlight that the tokens are linked to public X accounts. All the activity is on-chain, visible to anyone.
And that metadata linking tweets, creators, wallets is public on the blockchain.
Yes, that provides a degree of transparency, connecting the social layer to the financial layer. They also mention the rebrand from clout and having a verified privacy policy.
Okay, so we have a picture of what it is and how it works. Now let's look specifically at the strengths for investors, as laid out in this guide. What are the big positives they list?
First up is growth potential. Big time. The low friction means potentially onboarding tons of users fast.
Tapping into that social media user base.
Right, and linking to social means potential for viral growth. The source even points to LaunchCoin's own massive, like 27,000% price spike early on as an example of that dynamic.
Wow.
They see themselves as having an early mover advantage in this whole tokenized social consensus space.
Okay, harnessing virality for growth. Makes sense. What's next?
The revenue model. That transaction tax means the platform makes money directly from activity. It's an ongoing stream tied to usage.
Sustainable if there's volume.
Exactly. And the tax split incentivizes creators and early supporters, which should drive more creation and engagement. Plus, future staking or governance could add value to LaunchCoin.
Okay, a clear revenue path. What else?
Third strength, token supply certainty for LaunchCoin. Since 100% is already out there, investors don't need to worry about the team suddenly printing more and diluting their holdings.
Right, fixed supply, fully circulating, always a plus.
Uh,
And the last one?
Network efficiency. Building on Solana gives them speed and low fees. That's crucial if they want to scale to potentially huge trading volumes.
Essential for a platform like this.
And they mention integrating with Solana's DeFi ecosystem, using things like Meteora for liquidity, so leveraging the underlying chain's strengths.
Okay, so summarizing the strengths. Potential for viral growth, a built-in revenue model, fixed token supply, and Solana's efficiency. Now let's flip it. The risks and considerations. The source was pretty upfront about these two. What are the big red flags?
The number one issue seems to be token quality and oversaturation. Making it so easy to create a token means you're inevitably going to get flooded with low-effort stuff. Memes, jokes, things with no real plan.
Which leads to?
A lot of noise. And this is really important for you, the listener, if you're thinking about using this.
I mean, as a trader or a user?
Absolutely. The source basically says you have to do your own homework on any individual token you find there. The ease of creation is a double-edged sword. Great for platform growth, maybe, but terrible for average token quality, high risk of scams, or just duds.
Right. So accessibility potentially compromises quality. What's the next major risk?
Just sheer price volatility. Many of these tokens have zero utility. They exist only to be traded on Believe.app, so the source notes prices can swing wildly.
And Puin's observed pump and dumps.
Yes, that dynamic has apparently been seen. Extreme volatility, potential for manipulation, huge risks for traders, especially newcomers.
Okay, volatile, potentially manipulated tokens. What else?
Fee friction. We talked about that tax. That initial 30% rate, plus the normal bid-ask spread you find in any market. It can seriously erode any profits.
Especially for short-term trading. Those fees could eat you alive.
Precisely. It makes quick flips very difficult, maybe impossible to profit from.
Got it. Another risk.
LaunchCoin concentration. We touched on this. Over half the supply held by the top 100 wallets. The source is clear. Big sales from these holders could tank the price of LaunchCoin itself.
So the platform's own token price is vulnerable to the actions of a few large holders.
Definitely a risk. Then there's regulatory uncertainty. This hangs over everything in crypto, but maybe more so here.
Because anyone can create what might be seen as a security.
Exactly. The source admits it's unclear how regulators will view these tokens. Could they be deemed securities? Future rules could impact the platform, its model, user access. It's a big unknown.
Yeah, that regulatory question is massive. Any other risks?
Finally, the source points to platform centralization. Yes, the tokens are on Solana, which is decentralized, but the Believe.app platform itself, the app, the initial liquidity management, that's all run by one company, B24 Inc.
So despite the blockchain layer, there are still central points of control and failure. Important distinction.
Very much so. So if you pull it all together, the source paints Believe.app as this really novel concept, fusing social media and blockchain automation in a compelling way.
Enabling easy token launches based on social proof.
Right. Offering exposure to something new with early traction, a revenue model, the LaunchCoin token.
But, and it's a big but, it comes with this heavy package of risks. Token quality issues, wild volatility, those hefty fees, launch coin concentration, regulatory clouds, and platform centralization.
It's definitely presented as high risk, high reward, high beta, high innovation, very early stage. Both significant potential and significant dangers.
Okay, let's try and wrap up this deep dive into the Believe.app source material. We've seen the core idea, harnessing social energy, turning it into tradable tokens on Solana, making it super accessible via X.
We walk through the process, that tweet and tag mechanism, the engagement filter, the automated deployment with that on-chain metadata link.
And that very unique, high initial transaction tax model.
Right. And then we looked at the opportunity side presented in the source, the potential for explosive growth via social virality.
The revenue stream from trading fees, LaunchCoin's fixed supply, Solana's performance.
Balanced against that long list of risks, the flood of low-quality tokens, the crazy volatility and pump-and-dump potential, the fee drag, the launch coin concentration issue.
Not to forget regulatory uncertainty and the centralized aspects of the platform itself.
A very mixed bag, really.
So for you listening, whether you're looking at this as a potential investor, maybe in LaunchCoin, or a creator thinking about launching a token, or even just someone tracking where social media and crypto might be headed,
This source material lays out a landscape of, well, intriguing possibilities alongside some serious potential pitfalls.
the guide's conclusion seems to reflect that tension, right? Calling it high beta, early stage.
Yeah, and strongly advising caution with the individual tokens launched on it. Basically saying, treat those meme coins with extreme skepticism.
And suggesting that if you were to invest in a Laun CH coin, it's less about backing any specific token created on the platform.
And more a bet on the platform itself. A bet on the overall concept of tokenized social consensus catching on and Believe.app being the venue for it.
A bet on the infrastructure, not necessarily the things built with the infrastructure on day one.
Precisely. It's about the platform's potential overall growth.
You know, this whole deep dive into the Believe.app sources, it really highlights how quickly we're moving towards potentially financializing social interactions, turning likes into assets.
It definitely forces you to ask that question. Are we seeing the beginning of genuine social assets that actually capture community value in a new way?
Or is this just a slicker, faster engine for creating speculative hype around whatever's trending online for 5 minutes?
That's the big question, isn't it? Something to definitely think about as you process these insights.